Tuesdays, 4 o'clock on Wall Street, 1 p.m. here in Lake Tahoe. Do you know where your money is? Hi, everybody. Welcome back to the Closing Bell. I'm Maria Bartiromo, coming to you today live from Lake Tahoe, where the 24th annual American Century Celebrity Golf Championship is taking place. Stocks scaling new heights today as we await earnings out any minute from Google and Microsoft. We are on those numbers as soon as they hit the tape. Take a look at how we're finishing the day on Wall Street. Once again at new highs for the Dow and the S&P 500. The industrial average finishing in uncharted territory tonight at 15,549 even, up 78 points, 0.5%. Ditto for the S&P 500, a new all-time high. Write it down. 1689.40 is the new high for the S&P 500, up 8.5 points, reached today, also 0.5% higher. Nasdaq Composite still sitting at around a 13-year high at 3611, with a gain on the session of 1.25 points. We've got full team coverage of today's historic market action for you. Coming out, we are going to be talking about the record highs, with Ben Pace from Deutsche Bank and our own Mandy Drury joining us. Plus, instant analysis on Google and Microsoft earnings expected any minute when we get those numbers. We'll talk with Gene Munster from Piper Jaffray and Jay Vleeschauer from Griffin Securities. The estimates: Google earnings $10.78 a share expected. Microsoft earnings 75 cents expected. Let me kick off our discussion with today's record highs. Good to see everybody. Thanks very much for joining us. So, Ben Pace, let me kick this off with you. The market at all-time highs. Would you buy it or sell it here?
Well, I think we're at the point where you might not want to add here, but you definitely don't want to sell off. I think we're in a multiple expansion-driven market. These kinds of markets tend to overshoot targets. We're close enough to targets that we're not adding here, but we're definitely maintaining an overweight towards equities in our balanced portolios.
Okay, so you don't want to sell it, but you certainly would not be adding here. Paul, would you agree with that, Paul Dietrich?
I completely agree. I believe in looking at the long-term trends, and if you're looking at the long-term indicators, seeing what's happening with manufacturing, what's happening with agriculture, what's happening with energy and housing, all the indicators are pointing up.
Yeah. Paul, let me just interrupt you for a moment. My apologies. Google numbers are out. We want to get right to Julia Boorstin because the earnings look to be lower than the expectation. Julia Boorstin, what can you tell us?
That's right, Maria. Google's numbers are out, and both revenue and earnings are coming in lighter than Wall Street had expected. Google's EPS coming in at $9.56. It was expected to be at $10.78. Now, looking at the revenue, Google's revenue came in at $14.11 billion. It was expected to be $14.42 billion. Now, Maria, two other key numbers to look at here are the cost per click and paid clicks. Cost per click declined 6% over the second quarter and 2% over the first quarter of 2013. Now, cost per click was expected to decline just 2.6%, and instead it declined 6%. Now, paid clicks actually increased more than expected. We're expected to increase 20.2%, instead increased 23%. But, Maria, I just want to point out here that those revenue and earnings numbers both did come in light, and that is why the stock is down nearly 5%. Back over to you.
Yeah, the stock trading lower in the extended hours. Julia, thank you. We want to get more reaction to these numbers right now. Gene Munster from Piper Jaffray with me. Gene, what's your take on this quarter? The numbers below expectations. Was it below your expectations?
It was. We were looking for that paid click number of down 4%, so it was down 6%. That's the one everybody's hyper-focused on. You need to take that into the context of paid clicks and also the click growth, and the click growth was a little bit better. The bottom line is this. Google's rolling out new platform for advertisers called Enhanced Campaigns that is probably impacting that paid click number. I'll bet that they talk about that this transition is impacting that paid click number, and I bet they give some sort of insight that ultimately this is going to move click CPCs higher over time. So the bottom line, those numbers look a little bit rough, but my guess is their commentary on the call is going to be optimistic.
Gene, I'm just getting an email from Rich Peterson over at S&P Capital IQ. He tells me 1 month from today marks the 9-year anniversary of the Google IPO. That was a $1.66 billion IPO. Remember, they priced it at $85 a share. So when you look at a compounded annualized rate, we're talking about growth in this stock of 30% a year compounded. Did we miss it? I mean, should we be selling this stock at the level that it is? Have we missed the move in Google, or do you think you put money to work here?
It depends on what your time horizon is. I think over the next few quarters, it makes sense to put money to work because I think these enhanced campaigns are going to have a positive impact on CPCs. I think if you look over the next 5 years, it also makes sense to own it, not only for what we were talking about with the mobile side, but also YouTube, Internet of Things, glass and driverless cars. There's just a lot of things that Google can get to, and it's really the best positioned company in tech over the next decade. And so I think that it's had obviously a massive run, but there's some huge markets that they can get into.
You know, we're looking at a chart of Microsoft while you're talking, Gene, because the Microsoft numbers are out as well, and it looks like these are also below expectations. Microsoft trading down. What's going on with technology here? The market's at all-time highs, and tech is underperforming.
Well, you know, from Microsoft's perspective, I don't really know because I don't follow Microsoft. But I can tell you, in terms of Google, if you look at the eBay results, the Yahoo results, essentially they've been a slight disappointment kind of across the board. And I think what's going on is it's just this teething process that we're having as we're kind of coming out of the recession and getting our arms around what these numbers should be. I don't think there's anything functionally and structurally wrong with these tech companies. I just think there's natural progressions that they go through, and people have had a little bit too high expectations.
All right, Gene, stay right there. We're going to continue talking about these tech earnings, but we're going to get to Julia Boorstin for the breakdown on the Microsoft results. Julia, what can you tell us?
Good.
That's right, Maria. Microsoft's results also coming in light. Revenue coming in at $19.9 billion. Wall Street analysts were looking for $20.73 billion. Earnings per share coming in at 66 cents. That's less than the 75 cents that were expected, and also a penny less than the earnings per share we got a year ago. So both revenue and earnings lighter than expected. I'm going to continue to dig through this report and get a little bit more detail on this segment-by-segment results. Maria?
Okay, thank you very much, Julia. You want to go straight to our analyst on Microsoft, Jay Fleisauer from Griffin Securities for Instant Analysis. Jay, what's your take on the Microsoft quarter? Below expectations here for the average estimate, and the stock is trading down right now.
Right. We were looking for over $21 billion in revenues and 76 cents a share. We're still having to go through all the segments, but I think the most likely suspects for the shortfall would have been the Windows division, where the results were probably down sequentially. That was in our estimate. It's entirely possible they were down worse sequentially than we had assumed. Nevertheless, we would expect some recovery in the back half of the new fiscal year, fiscal 14 that they just began. In addition, the entertainment division very likely had some softness as well in light of the Xbox transition that's about to come up.
Does Microsoft have to make an acquisition in mobility? I mean, you know, everybody talks about the idea of BlackBerry or Nokia. Does Microsoft need to change its strategy even further?
No, I think we're satisfied with the strategy as is, which is to say we understand the logic of the reorg they announced last week. I think that makes a lot of sense. It'll take time to play out. There are, however, multiple product trains, so to say, that will be leaving the station, and we expect that will drive the business. I don't think they need to grow further inorganically. They've done a lot of that, but I don't think it's necessary to make the numbers for fiscal 14 or fiscal 15. We've ascertained, for example, that they're not in all likelihood working on a house brand Windows phone, relying on partners like Nokia and others.
All right, we want to get back to Julia. She's got more info on Microsoft. Go ahead, Julia.
That's right, Maria. Just looking at the different divisions here, the Windows division, which is obviously very crucial for Microsoft, revenue came in lighter than expected. And we also saw operating income for the Windows division decline significantly from a year ago. A year ago, it was $2.4 billion. This quarter, it was just $1.1 billion. So the operating income for Windows division did go down. Now, looking at the other divisions here, servers and tools, slightly lighter than expected in revenue. Also, the Microsoft business division, instead of coming in at $7.4 billion, it just came in at $7.2 billion in revenue. So some short disappointments there in terms of revenue. And in terms of operating income, though there were some segments that did see improvement, such as the server and tools business, we saw the decline in operating income in the Windows division, and also a greater loss in terms of corporate level activity, and a slightly smaller loss in terms of entertainment and devices. So various divisions there struggling, especially in terms of revenue. Back over to you.
All right, thank you, Julia. Interesting to note, both Microsoft and Google are showing declines after their earnings of about 4% or so. You see Google down better than 5% right now. Back with Gene Munster from Piper Jaffray talking about Google numbers. What do you want to hear, Gene, on the call? You said the paid click numbers were really most important here, and that's what everyone's buzzing about, the fact that they were worse than expected, right?
Yeah, I think really what it comes down to is just how this progression of to enhance campaigns, and what that's essentially trying to do is there's been this explosive growth of mobile clicks, and they're trying to raise what they're getting paid on those mobile clicks, and so they've come out with this new platform. The platform is going to be fully rolled out July 22nd, so keep in mind these numbers are impacted by a transition quarter around their platform, and that can scare advertisers at times. So what I want to hear is just how much has this transaction impacted, and specifically is of the customers that are using the enhanced campaigns, is it having a positive impact on CPCs? Because that's going to be a leading indicator for the next few quarters of where these CPCs are going to go.
Bottom line, would you put new money to work in Google right here?
I would. If you've got a short or a long-term perspective, I think it makes sense to own Google.
All right, we'll leave it there. Gene, good to have you. Thank you so much for your insights. We appreciate it. Back to these markets and the record pace that we've been seeing. Ben Pace from Deutsche Bank, Paul Dietrich from Fairfax Global Markets, and our own Mandy Drury. Mandy, you've got Google down better than 5% tonight. You've got Microsoft down better than 4%. Question is, does this really set the tone for tomorrow and perhaps this market pulling back from the record highs we saw reach tonight?
You would certainly imagine that in terms of the tech patch, I would imagine that misses like this from Microsoft and Google, two big heavy hitters in that space, it will probably not bode well for sentiment. But you know what? In terms of tech overall, the NASDAQ has very much outperformed the Dow and the S&P so far this year. So it has had a very good run, and maybe a lot of expectations have been built in here. And so I guess when you've got those expectations being built in, if there's any kind of disappointment, it's going to whack the stock hard. But you know what? So far, the market overall has been pretty good. So some profit taking would not be out of order here. In fact, I was speaking with some people today on Street Signs, Maria, and they were saying, you know, it's been so far a good start to the earnings season. You've got Ben throwing some fuel on the fire here. Things might be getting a little bit pricey and a little bit overbought, so it might not be a bad idea to start looking at trimming some positions and taking some money off the table.
Yeah, we'll see. You know, Paul, IBM and United Health, really the bulk of the gains that we're seeing in the Dow Jones Industrial Average today, those gains, because of their better than expected earnings, represent 57 points of the Dow's gain today, and we were up about 78 points, as you know. Why do you think technology has been underperforming? We got the numbers here for the second quarter, Microsoft and Google disappointing. Is there anything going on with technology that's different than perhaps, you know, you've got the Dow at the all-time high, transport's at all-time high, even the Russell 2000 index finishing at an all-time high tonight. What's wrong with tech, Paul?
Well, part of the thing is that if you look at the search engines like Yahoo and Google, there is a seasonal issue here. People go on vacation, and we know that this quarter, every year, there are just fewer people making fewer searches. That's going to result in fewer clicks. So it wasn't a surprise to me if you're looking at kind of, you know, the seasonal adjustments that go with these types of tech companies. Microsoft is something else. You had real disappointments with their Windows 8. It'll be interesting to see. The Office PCs are going down generally as people move to tablets, and I don't see a strategy, being a Mac person, I don't see a strategy for Microsoft to really take a lead in any of these areas.
Yeah, even though they've got so much money in cash on the balance sheet, which is really interesting. Sometimes great companies are not necessarily great stocks, I guess. Thanks, everybody.
Exactly.
Thank you.
Great to see you. We appreciate your time. Thank you.